Okay, everyone, welcome back to the Price Action Labs YouTube, how you can trade in certain market conditions, right? So gold itself, from some of the students I have and some of the free calls I was taking, gold was giving some traders some difficulty, right? So in this video, I aim to kind of tackle some of the difficulties that I saw traders have, and hopefully this video can help you kind of sieve out higher time frame bias and how to trade kind of intraday gold in these less predictable kind of areas, right? So how am I currently looking at the markets themselves, right? So we had a structural high, previous all-time high back from July. We had a pullback down here. So what confirms this low is the fact that this is the lowest point before this structure break over here. So this is my market structure shift, right? So if I just replay price back a little bit, so Friday the 16th of August is when we had our all-time high. So we saw price breaking structure over here. So now from here, the thing that I want to bring to people's attention is that ICT has to be as mechanical as possible. You cannot completely remove your emotions, but to better manage your emotions, it's better to have a mechanical, systematic, and repeatable framework. So the framework that I'm now going to introduce to traders is this. Okay, so when it comes to analyzing the higher time frames, there's four things I want the traders to understand, right? So the first of those is market structure. Now, market structure is simply those highs and lows. The second thing is our dealing range, okay? Dealing range. The third thing becomes our PD arrays. And the fourth thing becomes our inefficiencies or our fair value gap. So these are the four pillars that I refer to in almost every single video. The four pillars gives you a mechanical and systematic way to trade any market on the higher time frame down to the lower time frame and gives you a base to determining an overall higher time frame direction. So here we have the all-time high that's been printed, and the thing I want to bring people's attention to is how to trade near an all-time high or at an all-time high. Now, we understand from our market structure that when we break structure to the upside, we have a slight pullback before we break structure to the upside above the all-time high, then we have a pullback. So now we are in this kind of correction phase, should I say. We're in this kind of correction phase, or we have been in this correction phase. So this is what gave me an indication to look for sells in this particular week. Now, I don't trade gold myself, but it's a very popular market, so I thought I'll make a video on this. If I head down now to the intraday time frames, we can begin to understand that the week itself, Friday, of course, we pushed up again, which shows signs of a kind of shallow correction. But what I'd like to bring to people's attention is the concept of the weekly opening. So this line over here, this red line you see, is the weekly opening. So this is Sunday at 11 o'clock at night. This is UK time, so that's about 23 minus 5. That's about 6, 7 p.m. kind of evening time, late afternoon in the American, right, Eastern Standard Time. So this is the weekly opening. Now from here, it's important to understand how the weekly opening actually operates, right? So the markets will move up to go down, right? So if the markets want to give us that correction, so we have the all-time high over here, right? So the weekly opening gives you an indication of where to buy and sell from, okay? This is important to understand. So this is Tuesday. Tuesday often engineers the high of the week, which it has done here and for a lot of other asset classes, right? So if we rewind back to Tuesday, what we see over here, number one, we're above the weekly opening. And number two, from here, we've had a shift in the market structure, right? Internal shift of market structure. So just over here, right? So notice how a couple of things I look for when it comes to a market structure shift. The pullback should be at least 2 candles. That's the first thing. At least 2 candles. Okay, so we see at least a 2 candle pullback over here. The second thing is we must break with a body. So no body break, no boss. Do you see how this was not the structure break, but in fact, this fair value gap down candle over here gave us the market structure shift, right? So from here now we have an inefficiency just over here. Now for me to be confident and take sells, I want to see this fair value gap respected, right? So this is an inefficiency or a fair value gap, right? So I'm going to label that in a different color. So this is a fair value gap itself. So I'm now going to bring to people's attention how you actually respond when price gets to this fair value gap, right? So number one, we're above the weekly opening, which gives us a confluence to look for sells. That is the first thing. The second thing we want to understand is that during the Asian session on Wednesday, what we see is this fair value gap essentially has been filled. Now, when a bearish fair value gap gets filled and therefore respected, as we can see, this gives us an indication to really look for those sells, right? So we're above the weekly opening and we see bearish fair value gaps being respected. So we see this respected fair value gap over here, or this supply zone that's being respected, sorry. And notice how we are above this weekly opening. Now, this is what gives us our narrative to look for sells, right? So now, another quick tip I want people to understand is that we often have Monday's liquidity, which does end up getting swept, right? Monday's liquidity is a very, very, very key liquidity pool. This is like a quick tip I want traders to understand. When you're intraday trading, right, and you're looking to trade from one Tuesday to Wednesday to catch the meat of the move downwards, right, the bearish expansion downwards, using the Monday's liquidity pool or the Monday's low or vice versa, the Monday's high, if we were looking to buy, is a very powerful thing you can do, right? This is what we mean by sell side liquidity. The most powerful forms of sell side liquidity will actually occur at the previous day lows and the previous day highs. In this case, it's the previous day low. So now if I head down to the 5 minute time frame, we can get a little bit more intricate when we understand what's going on, right? So again, the volatility during the London session on gold is meaningful, but it isn't a lot. What do I mean by that? So I want traders to understand one other thing, right? We have the opening price, the midnight opening price, right, which is just over here. So I recommend every trader studies this and understands this. We have the opening price over here. This is a New York midnight opening price, right? So let's understand things, right? So once we have our Asian range, right? This is our Asian range over here. So the Asian range, quickly, I've gone over this a million times, but the Asian session range, I'll just write ASR for short. The Asian session range is 1 a.m. to 5 a.m. UK time, right? So wherever you are around the world, please calibrate it to 1 a.m. to 5 a.m. UK time. Now, once you have that in place, we can understand how the London session actually behaves, right? So the thing I want people to pay attention to is this price point over here. This is well within that London session or just pre-London session, right? We have what we call a bullish manipulation, right? We haven't quite swept the Asian high, but notice how we've respected the fair value gap from the previous day, and we've had a manipulation. So now we've had an accumulation manipulation. What I would want to see now is a break of structure. I want to see price commit to the downside. And that's exactly what we get over here, right? So this is as mechanical as you can get. Accumulation, manipulation, and distribution, right? So when we look for a distribution, what we're looking essentially is to key off a premium-based fair value gap. Now, what do I mean by premium-based fair value gap, right? So notice how from here we have a price leg, right? We have a structural high down to that structural low, right? So this is now in the New York session or just before the New York session, right? So our fair value gap, essentially delineates where our order block will be. So notice how we have a fair value gap just underneath, and this now becomes our order block, right? So this is our order block. So one question I often get a lot is this is our bearish order block. What actually makes a bearish order block, and why am I interested in a bearish order block? Well, we're looking to sell, and the three things that validate an order block, right? High probability order blocks have to break structures. There must be a boss, it must leave a fair value gap, and it must be priced in the premium for this particular dealing range. So we have a dealing range that consists of this swing high down to this swing low. So this now validates our order block, right? So this is where sell positions could be taken from. Understanding that our stop loss should really be above the manipulation. You don't want to be too tight with your stop loss. And a question I often get is, where do I target? Where's a good target? Well, your minimum target should be the structural low, right? Your next target should be the previous day low, which is Tuesday, right? And your ultimate target, where you want to take basically all your volume off, is going to be Monday's low down here, which is a 6.8R trade, which is fantastic, right? So notice how we have a bunch of liquidity that's resting all the way over here. So this is a trend line, right? Trend line is like meat. Trend line is like food for the markets, right? So once you have that in place, we understand that the bearish fair value gap was respected, and we have our order block on the lower time frames, accumulation, manipulation, and now distribution. So the order block is essentially what validates our move, right? So if price does eventually get up to that order block, I believe it does at some point. Yep. So when price does eventually get up to the order block, almost hit our stop loss, but we got there in the end. So this is now kind of the order block theory itself, right? So it's understanding we want to be selling from a premium down to a discount, right? So this is essentially, if we just let the trade play out a little bit. Yes, it takes time, but patience is obviously what you need in the markets, right? Especially with the market conditions we have currently, not necessarily the greatest. But yes, eventually we have our trade, which took about a day or two just to get there, day and a half. But yes, so this is a mechanical and systematic way to trade gold using accumulation, manipulation, and distribution, right? So again, if you like this video, give it a like, give it a thumbs up. There's going to be a lot more videos coming, and please let me know in the comments what else people would like me to see. Which other markets would people like me to see? and which other concepts would people like me to see? I'm also mainly a price action supply and demand order flow trader, as you can tell by my S&P 500. But I do like to dabble in forex every now and then, and gold is a pair I keep on getting asked about, so I thought I'd make a video on this. I hope it helps. We have a free Discord and we've got free consultation calls where you can kind of refine and redevelop your edge to what you would like it to be.